Great. Thanks, Paul. We have a team effort with the microphones to bring questions from the floor. So watch for Kristen and Jean, and we'll take your question. We'll take this one first. Yes, sir.
Hi. And picking up on the line that you, Jason, were going, and this has been a love fest, obviously. Everyone rightfully appreciates his success and so many things that he's done that we would all like to emulate on a personal level also, not only professionally. But I wonder, and as these panelists now are both shareholders and also managers of other people's monies, I wonder if not, what could have been or what could still be coming forth from Buffett that we haven't seen. And here I'm sort of picking up the mantle of my mentor, Abe Brilloff, who actually spoke in this very museum on 2 occasions. And I find some lack or disappointment, I guess is a better term, in a role that Buffett could have played in the sense of being a spokesperson for more transparent accounting, better accounting from the accounting professionals. As Abe showed us over the many years in Barron's, how the auditors aided companies in putting their numbers in the best context when, in fact, they weren't so. And also from a governance standpoint.
Right. So you're saying, should Buffett have
been more vocal?
Have taken an even more aggressive stance urging American businesses?
Or should he can still do it.
Right.
Why hasn't he?
Right. So I don't know, Paul, why don't you take that question? Is Buffett as aggressive as he should be in trying to be a role model, encouraging better behavior in the business community?
I think the best way is how you behave yourself. And so the way he's behaved in terms of running Berkshire, I think is really a terrific model on how to behave. With regard, and I mentioned it, Charlie, in terms of the corporate governance issue, the reality is I've had people say to me, because it's our largest holding, when I read the Berkshire Annual, there is just so much that I don't know. And that gets back to the point I made earlier, and that is we trust him, and it's deserved trust, and the organization deserves it. But when he's gone, for us, we think about that all the time. So I think when you've done things a particular way for a long, long time, it's hard to change. I think his autonomy and his, viewing how he views managers, autonomy and freedom, I think it's hard for him to change and require more and different things from the organizations that he's bought than what he's done in the past. So I think he's been a great role model, but you could argue from the corporate governance perspective, for example, in the proxy, what are people compensated? I don't know this, but I would guess there's many, many people at Berkshire making 5, 10, 15, 20 million. We don't know that. And so I think it's a fair issue, and I guess you could argue he could be more open with that.
Let's. Do we have a question back here?
Yeah, hi. So in the last 50 years, Buffett has probably been the best investor and a manager combination we have seen. So my question is, for the next 50 years, I know probably there is no Buffett, there's no more Buffett, but if you had to bet who would be the next, who would be the best investor, corporate manager person, who would that be?
Who will be the next best investor like Warren Buffett? Does anybody want to take that question?
Well, I'd give it a shot. He's probably a 24-year-old just taking over a bankrupt textile company who has the wisdom of Job and the patience of Methuselah and all the rest. And we constantly look for those people. The search is endless in trying to find the next one, but up until now, the next Berkshire has been Berkshire. Each time it's been Berkshire's the best. But the reason I took a shot at this question is there's something interesting about Berkshire's returns that I think needs to be publicly addressed, which is, over the past couple of years, there's been the first time ever when the prior 5 years, Berkshire may have slipped behind the S&P 500. And so there's a lot of discussion about whether there's a weight of capital issue, maybe slowing down and all the rest. And I just want to make sure that people understand that within the circle of deserved trust that would be represented by Berkshire shareholders, there are painfully few people who would have panicked out of Berkshire in 2008 and 2009. And they weren't given any reason to panic out of Berkshire because they behaved exemplary. They had nothing but piles of cash that were able to be deployed at high rates because the rest of the world was so troubled. Anybody who thinks that an S&P investor actually received the returns of the prior 5 years would be fooling themselves, because the S&P had behaved so deplorably that by the time early 2009 came about, when the benchmark starts, they had all run for the hills. And probably it wasn't until 3 years of a strongly bull market that they even tepidly came back into the market. So when Berkshire's held up over that particular 5-year period and saying maybe you lagged a little bit, I think you have to look behind that and say Berkshire shareholders mostly received that full throttle, and the counterpart S&P investors would have been paltry in the returns that they received because they were under tables and they've run for the hills.
Yeah, I think you raise a very important point, Tom, which obviously, as you know very well, doesn't address this gentleman's question, but is an excellent observation.
Of course it doesn't.
Which is, and I've often alluded to this in the past, I think the single most important thing anyone running an investment management organization can try to do is not so much to maximize the firm's performance, but to try to minimize the difference between the firm's performance and the performance of its investors. And that's the real genius, I think, of what Buffett and Berkshire have done, is that they've brought just about every single person in the community along for the entire ride, as opposed to waving people in at the peak and then watching them stampede out at the bottom. So I'm sorry, Paul. Let's move the mics around because we're running short of time, and I want to make sure we get lots of questions from the floor.
On the topic of succession, two quotes come to mind. One is Warren Buffett himself, who said that in case something happens to him today, a letter will come out tomorrow morning, starting with, yesterday I died, and then goes on to lay what is going to happen and what should happen. The other quote that comes to mind is Charlie Munger's, who a few meetings ago leaned into the microphone, as he does, and said, Warren has done such a great job for you all. Do you think he's going to screw up this last one? Thank you.
Whitney, do you want to take that question about succession?
I'm not sure I understood the question. Did you hear it better than I did?
I didn't catch all of it either, but maybe
Okay,
maybe we'll maybe
I'll
I can
restate
reframe
the
it.
question.
Yeah.
Speak loudly and clearly, please. The acoustics in here aren't great.
Got it. And my accent too. I feel Berkshire will do much better than the S&P 500 without Warren Buffett. To put it in a generally correct but precisely wrong manner, S&P has yielded 10%, Berkshire has yielded 20%, and Berkshire after Buffett, I hate to use those words, but Berkshire after Buffett will yield 15% at least. Please comment.
Yeah, I mean, my general view is from today's price, Berkshire is a very good bet. I mean, totally off the top of my head, I think after 6 years into a bull market, if you're expecting much more than 5% compounded from the S&P with dividends reinvested over the next 5 or 10 years, I think you're delusional. But, I think we'll probably continue to muddle along. And I think Berkshire might do 10% a year. And keep in mind, Let's not get the cart before the horse here. Buffett's 85. I actually went to an online actuarial table and typed in a bunch of things, and you can do it for your own if you want to know what the actuarial tables say about your own life and what your life expectancy is. And it came out with age 93 is someone with Buffett's characteristics will live to. So he's got another 8 years, and I think probably more. Now, he may not be running Berkshire right up until he passes. But I think there's an 80% likelihood that Buffett is running Berkshire the next 5 years anyway. And I take comfort in that, so I don't have to worry too much about Berkshire post-Buffett. I think the margin, and by the way, my valuation of $267,000 per A share today factors in 0 Buffett premium. It's investments per share plus a multiple of current operating businesses, full stop, right? Neither of those two numbers changes the day he passes. It just changes the sort of future optionality and upside, which I don't think is as great post-Buffett. So, asked to guess, I think Berkshire today outperforms the S&P from today's price as a 75-cent dollar by probably 5 percentage points a year for at least 5 years would be my guess. And I think post-Buffett, Berkshire by then will be that much larger, of course, and that is certainly an anchor. Might outperform by a couple percentage points a year, but probably lower risk too. So that's an important consideration.
Okay. So unfortunately, we've run out of time. We could talk about this all day, maybe all week. But thanks so much to my fellow panelists and to you. You were a great audience. Thanks again.